Hi, I'm Shin Yamaguchi, inbound leader with PwC Tax Japan. Today, I'm delighted to have with me here in Tokyo, Doug McHoney, PwC's International Tax Services Global Leader. As many of you know, Doug has his own podcast, the Cross-Border Tax Talks, where he's hosted over 100 episodes addressing the latest trends in international taxation, together with PwC's experts from around the world. Doug, thanks for joining us.
Thanks for having me, Shin. It's great to be back in Japan.
Indeed, it's been a year since our last Pillar 2 video here in Japan, and a lot has happened in the world of international tax since then.
It certainly has, Shin. And I think that the big message, and I think this was consistent with what we said a year ago, is that Pillar 2 is really happening. It's still happening. We've got 36 countries that are implementing or have implemented for 2024, and we have a number of dozens of other jurisdictions that will be following in 2025. And so we're seeing considerable more interest from management and from various stakeholders that are much more interested in tax and much more interested in asking a lot of questions about Pillar 2.
To your point, Doug, Japan is one of the jurisdictions that is introducing Pillar 2, specifically the income inclusion rule from 2024, effective April 1. Fiscal years thereof. And this week, we had a chance to meet with senior management in finance, tax, and business. And in those conversations, it was apparent that tax was increasingly part of the larger discussion, whether it be around sustainability, governance, or business more generally. And the driver of that is, indeed, going back to your point, Pillar 2, and this evolving international tax landscape. So with that, Doug, You've spoken with hundreds of companies around the world. Where are we going in terms of Pillar 2? How are companies approaching Pillar 2 as we hit the go-live date of 2024?
Yeah, I think that your first point, Shin, is very important, that Pillar 2 and tax in general is now at the C-suite level. I think it's always been a concern as we think about provision and compliance, but given the global nature of Pillar 2, the complexity and the fact that effectively an entirely new set of books needs to be established to comply with Pillar 2, that it is really elevated tax. The other big challenge that multinationals are facing, and this is not unique to Japan, is that while Pillar 2 is a tax, this is much bigger than a tax challenge for multinationals.
Absolutely.
Yeah. In other words, we need to have, taxpayers need to have a variety of stakeholders involved because the data collection is a really big challenge. And so having people within an organization throughout the finance organization, controllerships, accounting, the systems people, it really requires a broad spectrum of stakeholders to just start to get the data that is necessary before we even get into the calculations that need to be done.
And I think this data gathering process, which is a very large undertaking, is also transforming the tax function. Pillar 2 is in fact challenging, I think, the tax function of Japanese corporations. Previously, they were slightly more decentralized. Now they have to reach out to their colleagues in the local subsidiaries. Their local subsidiaries have to talk with accounting, again, going back to your cross-stakeholder issue, and it's bringing in a larger proportion of the organization, which again brings back to the question, what is the role of the tax function in a large multinational? What are you seeing there in terms of how Pillar 2 is perhaps changing the tax function around the world?
I think one of the challenges that Japan is facing, and we see this in a couple of other jurisdictions around the globe, is that historically, they've been pretty lean at the top with respect to the number of tax professionals that sit at the parent company and have generally had a relatively decentralized approach to how they do tax compliance, tax provisioning, and generally the tax work that's done. Pillar 2 presents a really unique challenge in that it is the first global system of its type. And because most of the calculations are based on the financial accounting system of the ultimate parent entity, it really requires involvement and coordination and leadership by the parent company. And so I think Japan, like some other countries, really need to, those Japanese multinationals need to think about how can they centralize the overall approach to Pillar 2? And just the way the rules are designed between the income inclusion rule, the qualified domestic minimum top-up tax, the fact that QDMTTs may be based on either local stat or the financial accounting system of the ultimate parent entity, really provide challenges and require the involvement and the coordination at the parent company to be able to do these complex calculations.
And speaking of rules, let's talk about safe harbor rule is very significant. It plays a significant role. Maybe talk a little bit about the transitional CbCR safe harbor rule and how companies should approach the analysis there. There's some complexities there that may not be readily apparent at first blush.
Yeah, I think that many taxpayers have started with, you start with the safe harbors, right?
Yeah.
If you're operating in higher tax jurisdictions, it is arguably less complicated than the full globe calculations.
For sure.
To be able to use the country by country report for the basis of the transitional safe harbors. Some of the challenges that we're seeing with respect to those transitional safe harbors is, first, the country by country reports have never been audited by financial auditors or local taxing authorities because it was really just based on informational return. So one of the first things that taxpayers need to do if they are thinking about relying on the transitional safe harbors is understand, do they have a qualifying country by country report? And there are a lot of complexities associated with that. The other important thing that companies need to consider if they are going to rely on the transitional safe harbors is, when is the country by country report actually completed during their tax process? I think for many taxpayers, it's done later in the year following, historically.
And it's been for information reporting purposes
Right.
as well. Although I must say, Japanese companies have been relatively diligent on the CBC front.
Right. And now, because it will impact the tax liabilities, companies are going to need to accelerate that process to be able to get a finalized country by country report completed for purposes of their year-end provision.
And how would you also incorporate certain adjustments that you would have made historically as well?
Right. And so as companies think about those transitional safe harbors, the first quarter for those public companies that will be audited, that is really the first looming deadline. And then obviously, as they think about the year-end provision, really having a good handle on the country by country report and that overall process is going to be critically important.
And so let's talk a little bit about compliance and the actual calculations, as well as given the enormity, perhaps how can companies leverage technology as we proceed with Pillar 2 compliance?
Yeah, I think the biggest challenge, Shin, that taxpayers are going to face for the calculations is that there could be a variety of different rules that apply depending on the jurisdictions that a company may operate in. So said another way, there is considerable flexibility given by the OECD to jurisdictions with respect to how they implement a qualified domestic minimum top-up tax.
For the guidance.
Right? Whether they use local stat, whether they use the financial accounting system of the ultimate parent entity, but also considerable deference with respect to the underlying design of the QDMTTs. The other challenge taxpayers will have is that the OECD continues to put out additional guidance, and how countries actually bring in that guidance into law could result in many countries having different rules depending what administrative guidance they may or may not have actually incorporated.
And if you're a taxpayer, how do you approach that?
Yeah, so the biggest challenge to approach it is, how can you identify a technology that will be able to incorporate all of these different layers of rules and be able to incorporate multiple jurisdictions rules, including the IRs, including the QDMTTs, and is there a technology that can also update the rules as they change in jurisdiction?
The updating will be key, actually.
It's going to be really important, and that's been one of the major designs behind PwC's Pillar 2 engine, a centralized rules engine based on graph technology that really is a market differentiator in that it includes all of the various countries' QDMTTs, including the Japanese income inclusion rule, and that it's also designed such that as rules change, to your point, we can update those in one central spot so that all of the client's data is then incorporated into those updated calculations.
Thanks, Doug. I think the takeaway here from Pillar 2 is it's just about tax. And we have to leverage technology. We have to think about the tax function. We have to figure out ways to gather the data, and addressing all of those issues together concurrently, I think, is the only way that we're going to address Pillar 2 and set ourselves up for more the tax function becoming a greater part of the large multinationals. So Doug, thanks again for joining us here in Tokyo, and hope to continue the discussion.
Thanks, Shen.